if you've just joined us, this is part two of my conversation with the amazing Sandra Asiedu. So if you haven't listened to part one yet, I definitely recommend going back to catch her journey and the foundations we covered there. In this part, we're getting into what's happening right now, the current UK property market, the recent changes, and what the latest budget means for landlords and property investors. So, if you've been wondering whether now is the right time to invest or how to move wisely in this season, this part is especially for you. So, let's get into it. So the current, UK property market I know even when I think about it, it has gone through a few changes recently, especially in my mind. So from your perspective, what are some of the biggest shifts that investors should be paying attention to right now?
So I will say specific or mostly for long-term landlords, I would say the Renters' Rights Acts, which are the reforms for private rented sector in England, is like one of the key ones to pay attention to right now. And also the tax implications from the recent budget. And both of these things are reshaping how landlords operate. So essentially, investors across whatever, I know I started off by saying long-term landlords, but actually I would say investors across all strategies should pay attention to this. There's a rise in compliance requirements. So you can't literally just have a place to rent out and, the standards are not up to par. I mean, that wouldn't cut it. It wouldn't cut it at all. So so the rising compliance requirements, need to be aware of that. You need to be aware of the higher borrowing cost, obviously. And there's also like growing focus on energy efficiency as well. So that's a big thing as well that people need to be mindful of. But also I would say for people that are flipping and refurbishing properties, people would need to be mindful of like the building costs and the planning rules and like the resale demand. Do people actually have the money to buy what you'll be selling? I mean, not too far from where I live, I've seen a housing development come up and most of the places are empty. So one needs to think about, are people actually, is there that demand for purchases? I mean, so I think that's something that people need to be aware of. But there is still opportunity. It's just those investors that will stay informed and adapt to their strategies, not just relying on how things used to work, would be rewarded handsomely, I would say. And I would say that listeners can have a look at, the government has got this rent is changing campaign. So there's a website, .gov.uk, rent is changing. It gives you like a lot of information around the Renters' Rights Act and what the changes are from the 1st of May this year.
Okay, no, that's good to know. That's good to know. So with rising interest rates over the past few years and change in affordability, especially as you said, I suppose if you even include the renters' rights, how have these impacted property investment opportunities?
So what I would say, for example, when I was talking about, just looking to see if I could get a property, I was thinking about doing that 2 or 3 years ago.
Okay.
But because of the interest rates, and obviously I am using mortgages to do that, because of the interest rate, I had to hold off because it just wasn't the right time. So I'm pretty certain that there are, investors that are in that kind of space where you want to do something, but it's not quite the right time. So the high mortgage rates definitely have an impact in that sense. And then there's also this added thing of there's a slower growth in rent. So you can increase your rent, but if nobody's prepared to pay it, so Yeah, so there's a slower because wages have not increased the same way. They have not kept up with inflation. So
Yeah.
because you're having higher mortgage costs and then lower rents or slower rent growth, there's a
Yeah.
squeeze on profits for landlords. So because of that, there's that mixed reaction. There's some people that are selling up and just leaving, like, you know what, property is not as lucrative as it used to
Yeah.
be.
You know,
Um,
on YouTube, I think I mentioned it before we
yeah,
started. On YouTube, they're just adverts about landlords selling out their property. Yeah.
yeah.
So
And then others are reducing their portfolio. They'll say, okay, let me just keep a couple there. But there are others
yeah.
that are just holding off and like, you know what, we're gonna ride out this storm. We're just gonna ride this storm out, you know. But I think that point takes me back to the point where I made earlier about property is a long term thing. The
It is.
market
Yeah.
sometimes can be volatile changes, but it's a complex. I read somewhere it was saying it's a complex machine, and it kind of adjusts itself. That if you're patient enough, usually, I say usually,
Usually.
things will balance out in a way that if you ride out the storm, it will
Yeah.
you know you get a good return on your investment. So the
Yeah.
conditions they've created, even though some people are coming out, it's also created opportunities for investors that are prepared because there's less competition.
Yeah.
You know,
Yeah.
there are higher barriers to entry, and
Mm.
there are motivated sellers. People are just selling, and some people
Yeah.
are pretty much selling it for anything. They get fed up. Well, not anything, not literally anything,
Yeah,
but
but you know what?
you know,
It's a lot. It's cheaper, as you say.
yeah,
It's because as you say, it's what do they call it? It's now a buyer's. Yeah, I think you mentioned it
pretty
is a
much,
buyer's
yeah,
market.
yeah.
So yeah,
So
yeah,
yeah, if you so yeah, it's there are opportunities, there are less competition, motivated sellers, and there are better deals for those who understand the numbers. And if you have a long term view, so while the environment is challenging, it's rewarding
mm,
if you're strategic about it, if you know what's coming, if you're working towards it, you know. So the passiveness of property investment, I think, is over. One needs to
mm,
be actively involved in strategizing. Is where I
mm,
see things, you know, the
mm,
impact of some of these
mm,
changes in the market.
yeah,
Really. Yeah.
yeah. So with the latest UK budgets, have they've introduced several changes affecting landlords. You know, we briefly discussed, particularly around stamp duty and stamp duty surcharges and tax treatment of rental income. That's I have to say that's another one that's like
Yeah.
anyway. I shall not be emotional about it too
No,
much.
let's
So
not do that.
let's not do that. So, how do you see these changes shaping the future of smaller property investors?
So obviously, the changes that you've talked about. So the UK budget, so the autumn budget. So this was late last year.
Yeah,
Um, and then they have definitely made smaller landlords stop and assess their plans. So it's like, oh, I
yeah,
wanted to go into property. Now you hit the budget and like, oh, you're gonna treat tax differently. Oh, you know, all of that, you know, stamp duty and all of that. So it's making people stop and think, you know,
yeah.
and some of the tax changes, including like higher tax rates on rental income, but that's coming in
Yeah,
2027.
it
But I
is.
say
Yeah,
that, but that's just next
it's
year.
not. Yeah, it's not very long. We're in March, so it's not very long at all. It will
Yeah,
just sneak
but
up.
yeah, it definitely is making people think carefully and making it, you know, people nervous. But I mean, in
Yeah.
terms of the stamp duty, it's really just a continuation. The stamp duty surcharges are already in place. So the stamp
Hmm.
duty surcharge, you know, that extra 3% tax that you pay when you buy an additional property. So whether it's a buy to let or a second home, they
Yeah.
just add it onto the, you know, the normal stamp duty rates, and it
Mm.
applies whether you're buying personally or whether you're buying it through a company.
Yeah.
And so it's definitely one of the biggest costs that investors need to factor in when they're running
Mm.
their numbers. So you just have to be aware of these things coming in. So you need to stop. You definitely need to stop and think,
Yeah.
So yeah, the shifts have made some landlords like really nervous. And I think we mentioned it before. People are selling up, others are just, taking a step back
And
and
keep
just
and
having a think. Some people are rethinking their entire strategy. But I think
yeah,
what is really doing is pushing investors to be more intentional and better informed. So if you
yeah,
don't know what's happening and you're not intentional about what's happening, then it probably isn't the space for you.
yeah.
And smaller
That's
landlords need to think about how they structure their portfolio, whether they're buying personally or through a limited company. Because it might be that if you're looking at what's the word? If you're looking at maybe like a reasonably big portfolio, if you're looking at doing property for a while and creating a property for yourself, there might be benefits in incorporation, so buying through a limited company, because then the taxes there are a lot less
yes,
compared
yeah,
to when the tax is being
yeah,
treated as a separate income. It's a lot higher when you're doing it in your own name, and things like in the um when you're using the limited company, you can still charge the, what's it called now, the mortgage interest as a cost, whereas you can't do it if you're buying it in your own
your
name.
money.
So there are
Yeah.
advantages. It's literally about, it's creating like a more professional landscape. You need to know what you're doing. you know. Um,
You can't you can't just stumble into
no, you can't.
property
No, definitely not. You're
and
definitely
stumble
not doing
your
that.
way
You need
through.
to understand the rules. And you need to be able to adapt. But there's just plenty of opportunity. And I think what I would say, I mean, it's probably easy for me to say that, but the practicalities might be a bit different. But actually, all it's doing really is raising the bar. It's just raising the bar.
Yeah, I
So if
like
we
that.
look,
That's a really good positive viewpoint.
yeah, if we look at it that way, it may not just be as we need to be armed, we need to be adaptable, we need to be knowledgeable, we need to be intentional, and
Yeah.
then say, okay, well, this is the space that we're working in. How do we thrive in this space? And there are definitely ways of doing it, which is why expert advice is really important as well
Yeah.
in this space. I mean, going forward, more importantly so now than ever before. And
Yeah.
yeah.
So do you think that with all, with the changes, um the higher stamp duty, the thresholds having been dropped again, and the increasing upfront costs, do you think that this will discourage new landlords from entering into the market?
Okay, so I think so the stamp duty rates, the rates themselves haven't increased. So I think I mentioned that earlier on.
Okay.
The
Okay.
3%
Oh,
surcharge, it's been there since like 2016 or so. It's been there.
okay.
What's happened now is that they've lowered the threshold for the stamp duty. So more
Yeah.
properties are falling into that
Falling in.
lower
Yeah.
threshold. So
Yeah.
what it means is that you're going to pay stamp duty on, you're paying stamp duty sooner. You're paying stamp duty on the standard rate, and then you're paying the 3% on top of it, on the
Yeah.
difference. So there's a larger portion of like
That's
upfront cost for first
Look,
time
that's still a
landlord, you
sneaky
know.
way. That really is still a sneaky way to getting more money.
Well, yeah. So
That really is.
it is, yeah. So the upfront costs are higher, so for
Yeah.
first time landlords or those with tighter budget, that can definitely be a deterrent. That's
Yeah.
definitely for
Yeah.
sure. Um, I mean, the surcharge when it first came in, it actually pushed some investors out anyway. But now you have the combination of that and the lower threshold, and then the rising property prices. So then more of
Yeah.
them are being caught in that
In that
lower
way.
threshold. So it's making the
Yeah.
entry more expensive. So yes, new landlords will be discouraged. But these upfront, the upfront costs, they shouldn't they don't stop everyone. If they're more
Yeah.
experienced and then more capitalized investors, they see it as an opportunity. And I think we mentioned that already. Again,
Yeah.
less competition, more
Yeah.
motivated sellers, you know,
Yeah.
potential
Yeah.
for longer term returns. So
That.
if you're running the numbers properly and then you make sure that the deal works and you factor in the
Mm,
cost, you have to factor. That's why my mentor will always say, show me the numbers, show me that
show me.
spreadsheet.
Show me the figures. Yeah. So I suppose, I mean,
Mm.
just going back to the things you said, or some of the things you said, where now it's really important that you don't just do your numbers, but you study, because with studying and with doing your research, it's still not impossible for new landlords. You just have to, as you say, have the right figures, make sure
Yeah.
that everything is covered, and then decide, which property, where,
Mhm.
when. Do you know what I mean? All and aligns with you and what you want to do.
Yeah.
So we.
So I was just gonna say that there's a lot of, I want to call it noise in this space,
There
because
you go.
so sometimes when the budget is read and all that, sometimes we don't take our time to understand, okay, what does it actually mean on a
Yeah.
day-to-day basis for me? Yes, you can almost clearly see that there's there's a lot of cost coming. You can see that. But I think
Yes.
sometimes we need to take the time to break it down so that you can actually see what's actually
Mm,
happening and what the impact would be. And I think
yeah.
someone like Martin Lewis does a lot of work on breaking things down so we know what it actually means. The government's website also does that as well. And there's a lot of landlord forums. Some do a lot of complaining, but you find some really good ones. Some really good ones that are breaking down the implications of what this
Yes.
actually means and how to plan towards it. So I
Yeah.
think it's important that we kind of zone out of the noise a bit and see, okay,
Mm,
what does this actually mean? If it's not for you, it's not for you.
it's not for
But
you.
that,
Yeah.
but that should not deter you completely from that. Do the research, get the figures, get the numbers, look at the different perspective. And if you feel like, your affordability, your circumstances allow you to do that, then yeah, definitely some opportunities here.
Yeah. Yeah.
Yeah.
So we're also, in addition to our wonderful budget, we're also hearing about just broader regulatory shifts, such as, I mean, we talked about Renters Act, there's the
Yeah.
proposed rental reforms and the changes to tenant protections. How should um, how should landlords be preparing for the evolving regulatory environment?
What I will say is education is essential here. So
Mm,
landlords need to understand not just what is changing, but when those changes take effect and how they will impact your day-to-day management and your costs.
mm,
So when you're talking about the rental reforms, and I think I mentioned that website earlier on. So the
yeah,
rent is changing,
yeah,
um, the government's website. You can have a look to see some of the changes that are coming on. But essentially, when I read it, I don't. Maybe I've got a bit of a. Maybe I'm a bit too soft. I just think, well, but if I was going to live in somebody's house, I expect the place to be of a good standard. So that's how I
yes,
look at it. But then again, I've got to also put on an investor business mind hat on as well. Okay, but essentially the changes are new rights and responsibilities for landlords in England.
mm,
So rights
mm,
and responsibilities. If you're going to be a landlord, you've got some
yeah,
responsibilities. The
yeah,
tenants
yeah.
also have some rights.
True.
You
Which is
know,
true. But
um.
then, do you
So
think, just in addition to your question, do you also, okay, actually finish, because I have another question to ask, and
okay,
I don't know whether that's making me a bit of a Scrooge, a rental Scrooge, but no, you
okay.
you finish what you
So
have
so,
to
so
say.
I did say that we should look at what is changing and when it's changing. So for example, from
Yeah.
the 1st of May, rent increases will be limited to once a year, because your question is about how do we prepare for this, and I'd say so we need to know what's happening. So rent increase will be limited to once a year. So landlords, you need to make sure that your rents are set appropriately from the start,
That's,
because
I think
you
that's,
won't be able to just go in and just increase it at
yeah,
any point in time.
yeah,
So
I
knowing that
think
that's
that,
coming from the 1st of May, which is literally just, is it 2 months away? So if there's something that you need to do, you need to do that sooner rather than later.
yeah,
So
this actually is why have you heard a story about landlords are just have given people a notice, whether it's section 22
yeah,
notice, and just saying, I want you to leave, I want, that I heard a story about someone who had a whole load of properties being rented. I
right.
think a few this month, it was this month, saying that he just had told them that he wanted them to leave. He did a section 22. So yeah.
Yeah. So yeah, there's a lot of that going on, and it's also there's also off the back of that some from that 1st of May one. So there's also that eviction one you've talked about. There
Yeah,
has to be, I think there's something that they're calling grounds for possession. There's got to be like a legal grounds. There's certain, grounds for which you can evict a tenant.
yes,
So we just need to have a look at that to just make sure that we, on the right side of the law, if you like.
of the
But
law,
also the
absolutely.
fixed tenancies will be banned. So most of the new and existing tenancies in the private rented sector will become assured periodic tenancies, or they'll be rolling tenancies. So for example,
Mm,
just be like every month. So
yeah.
it's easy on both sides,
Mm, mm,
for the tenant to say, oh, I'm leaving next month, or for the landlord, if they've got the right grounds for eviction, to also, so it's I think it's just going to be shorter periodic tenancies rather than say, an entire
yeah,
year or that sort of thing.
yeah,
But then there's
yeah.
also the upcoming requirements for private landlords in England and Wales to ensure that
Hmm.
all rental properties reach an energy performance certificate rating of grade C or higher by October 2030. So there's a little
Yes,
bit of time in that. So what that means is that if you're buying a property today, you need to check the EPC rating before you buy it.
yeah.
Okay. If you go in and you know that an EPC, for example, is an E, and you go in knowingly and buy it, you need to just make sure that
Without saying,
you're budgeting for how you're going to improve that and bring it to a
no, yeah, of
C or
course.
higher in what, 4 years time, roughly? Well, a little over 4 years. So you need to think
That's
about that, you
yeah.
know. Unless you're thinking, oh, I'll sell off and leave, which the exit strategy I talked about.
But then, who is going to want to buy it unless you're
Exactly that.
you've really reduced the price so that they can then invest money to bring it up to that amount or to that
Yeah,
level.
I know. So yeah, there's a lot to be aware of, when it's coming, what is happening,
Yeah,
what do I need to prepare? And so the stronger tenant protection, and there's the clearer rules around notice periods and property
yeah,
standards. What it just means that landlords will just need to be more organized, more
yeah,
transparent, more compliant. And those who are going to make it are those who are proactive. You can't just wait for things to happen. You need to keep up
yeah,
with the guidance. You need to plan for upgrades. You need to treat your portfolio as a business. It cannot just be laissez-faire. Just let it
yeah,
be. No,
yeah.
otherwise you're probably going to lose a lot of money. So rules
Mm,
are changing, but with the right preparation, there's no reason why smaller landlords can't adapt and succeed. But it's a
yeah,
lot. It is a lot. Haven't said that.
yeah. Yeah, I think one could say that we've relaxed for a bit. Do you know what I mean? Landlords have relaxed for a
Yeah,
bit, and now the government is kind of saying, yeah,
yeah, pretty much.
you've got to get your act together and get it fast.
Pretty
Yeah,
much. Yeah.
yeah.
So
So
it just
looking,
means slimmer profit in some cases.
yeah, very true, very true.
Yeah.
So looking ahead, over the next, say, 5 years, maybe 10 years, do you think that property will remain one of the best wealth building tools in the UK, or do you think investors need to adapt their expectation?
No one can predict the future with any certainty. I
I
mean,
know.
one day we go to bed, the next time we wake up and there's war in the Gulf.
There's more, yeah.
There's big global events happening. One day we had a prime minister, the next thing interest rates were going. So nobody can predict, this
Yeah.
future with any certainty. But I think based on what I've read, that property
Mm,
has performed historically, even through very difficult economic climates. So my view, and I think I believe what I've read, you know, that property will still remain at the top reliable wealth building tools. Because and I
yeah.
think so I was just asking the question and just reading around. And I think the reason that I was given, and I kind of believe that, is that the fundamentals of property haven't changed. So it's a tangible asset. It would almost always produce income. It would almost
Mm,
always grow with time. People will always need somewhere to stay.
somewhere to stay. Yeah, I was thinking.
I understand that the government's quota for building a certain amount of houses, every year, they haven't met that quota. So there's
We
still a
haven't
gap.
met
People
that.
need
Yeah,
somewhere to stay.
that's another thing. Yes, I think
You know, so
they've been short for a while. So yes, so there is a shortage of
yeah.
um,
So
buildings.
property seems based on this kind of like anecdotal evidence that it's
Mm,
probably still going to be one of those top reliable wealth creation tools. I mean, it's
yeah.
the approach that is probably going to have to change the way we do things. But
Mm,
anybody that's going, I think, is going to be successful will be the ones that are. It's the numbers again. You know,
numbers,
the
numbers.
numbers, it's got to make sense. The numbers have to make sense, adding value to the property, understanding the regulations, using,
Mm,
some smarter strategies rather than relying on the old thing that, oh, property will just go up,
yeah.
or it will just go up. But so, yes, we need to
Yeah.
adapt our expectations and maybe manage our expectations to some degree. But I think property will still be amongst some of the best or the top. I mean,
Mm,
I can't say the best necessarily, but I think it will be in amongst the tools that people will fall on to build property. And I think
yeah.
it will just the next 5 to 10 years it will reward those who understand it and they keep on top of the regulation, the rising costs. People are smarter, and yeah, there's a lot of work,
Mm,
but I think there's a reward in there as well. And people that are prepared to ride the storm, it's not a
mm,
short term.
yeah. Yeah.
It's almost like similar to where people say, oh, you buy stocks and shares and you just leave it there. Just because the
Yeah.
market is going up and down or looking like it's crashing, whatever, and you go and take your money out. No, you
Mm,
leave it there for a long time. That's what investment is about usually.
yeah.
Um,
Yeah.
it's a long stretch.
It is. No,
Yeah.
that's true. That's true. So, just finally, if someone someone's listening today is serious about building wealth through property, what's the one piece of advice that you would give them before they start? I mean, I know we've gone through a lot, and please do watch it again and again, because what you've said is just really valuable advice. But if you were to give them one piece of advice, and before they start looking into properties, what would it be?
I would say educate yourself about the sector and the industry and then take action.
Yeah,
You don't need to wait for the perfect moment. There's no real perfect moment as such.
yeah,
Just get the
yeah,
education, get the basics, understand, all the things we talked about, strategies,
yeah.
finances, your circumstances, and don't necessarily wait for the perfect moment. You will learn far more by starting than by
Yeah,
standing still. And you don't
yeah,
need to have everything figured out.
yeah,
Something is find a simple, well chosen first deal. It will teach
mm,
you more than a year's worth of research. So you can be sitting in your room, going to the library, learning, reading this, and not doing anything about it. Then, time is passing by time that you could have invested in something and, be seeing your investment grow. You haven't done it. So I would say definitely education. And if I
Yeah.
may, I just want to say, it's really important to surround yourself with supportive, knowledgeable people. This is it's not a time to do guesswork at all.
Yeah,
It,
definitely
it,
not.
it's
Not
got
now
to be,
anyway, with so
yeah,
many changes.
no,
Yeah.
it's a lot of money that usually goes into property investment. So get the right people, knowledgeable people, expert advice,
Mm,
ask questions, but then take the first step with confidence. Property is not just for experts, but you obviously surround yourself with those experts. And I think that
yeah.
if you're willing to learn and grow, you should be able to do okay. And I'll say,
Yeah.
don't wait until you have lots of money to get into property.
Yeah.
We talked about different ways that you can get into property. So
Yeah.
yeah, there's partnerships, there's government funded schemes around. I mean, more very recently, I came across, I think it was for my area, that the local government, or the council was giving out, I can't remember if it was grants or loans for homes that were empty, that they
Oh,
wanted developers or investors
yeah.
to come and
Yeah.
I think it was loans, but they're kind of like soft loans kind of thing, not
Yeah.
interest are not
Yes.
too high, so that people can
Yeah.
actually develop empty homes in the area and bring it up. So
Oh,
there's
wow.
ways, there's
Yeah.
ways of getting into it. So don't wait
Yeah.
until you think you know everything. You will never know everything. Even when you're in, you don't know
Yeah.
everything. So educate yourself, you know,
Yeah. Yeah.
learn as much as you can, and then don't wait until you have money. If you are determined, if you're prepared to learn, prepared to put in
Yeah.
the work, yeah, things will line up. It's amazing how when you decide that this is what you want, things line up. Things
They
just
do.
because I remember
That's
when I was going to buy my first property, it was very strange. But I had decided and I was putting things in place. But it was the year when the government decided that there was no stamp duty for first time buyers, and I was like,
let's get it.
yeah. So yeah, just keep preparing. Things will line up. Somehow
Yeah.
they do. Just yeah. So
Yeah.
yeah.
Well, that's fantastic. That's a fantastic time to get into the property
Right.
market.
This was, I think it was 2018 or 2017 there about that. Yeah, I
Yeah.
didn't pay stamp duty.
Oh, wow.
Yeah.
What was I doing then? That would have been a fantastic time to buy another property. What was I doing? I let that
It
one
was for first time buyers. Yeah.
go. Oh,
No
so
stamp duty.
I
I
would,
didn't pay no stamp duty.
yeah. I think I remember then, but I think yeah, because it was for first time buyers. Yeah, I didn't bother with that.
Yeah, and they,
Okay.
they had all this help to buy and all that. There's
Yeah,
something. There's
yeah,
always
they
something there. Yeah,
different things.
yeah,
So it's just being prepared, just or getting prepared.
yeah.
So we should continue. Oh, Sandra, this is, do you know what? This is golden information, honestly. Even for me, I will go back and watch it because, as I said, I mentioned I do I have two properties. I do want to increase my property portfolio, but there've been so many changes with the budget, and honestly, I have been listening to a lot of noise. so so you being here has I think for me, to be honest, it's I invited you for me, not for no offense to all the other people watching. I'm sure they have valuable information, but you're here for me to hear this wonderful information. So
Thank
thank you
you.
so much. Honestly, I am so grateful for you sharing your journey, your insights, your honesty, and I know definitely that this is going to help so many people who are thinking of properties or buying properties, or who are already on that journey, again, like me. So, and to everyone listening, if this episode has encouraged you or given you clarity, don't keep it to yourself. Share it to as many people as possible, as many people as you know who are thinking about getting into property investing. And make sure you subscribe, leave a comment, and let me know your biggest takeaway from this conversation with the wonderful, lovely Sandra. And I will be sharing your comments with her. And if you're
Oh,
serious
thank
about
you.
building wealth intentionally, either through your business, through your career, or investments like property, On the Go is the right place. So there are lots of videos that you can watch, and I'll see you in the next episode. Thank you so much.